How's it going? It's Rocky. Welcome to week number 9 of our $2,000 weekly challenge. Normally, I do an account statement every Friday to show you how I did for the week and also to review some of my trades. However, I just wanted to update you on how we're doing on our 2-day margin call. So if you watched the content last week, I have the link above. We had a pretty bad week and we lost $5,243.98 for the week. And that's mainly because due to some emotional trading that I did by trading the E-mini and also the micro E-mini. And essentially our game plan was that we were going to see how it was going to react yesterday, Sunday, and also today, to see if we were going to cut our losses or let it recover. My initial plan was I was holding 6 micros, as you can see right here. I had 6 micros that I traded, and this had an average of 31,707. And basically, I was going to get rid of that first and then let the mini itself recover on its own. Essentially, my goal today is to show you how to handle a 2-day margin call. So 2 things is like to not do what I did so you don't get any margin calls. And then if you do have a margin call, to make sure you manage it correctly. Like what I mentioned last week, I had a margin call on Friday, but I did not satisfy that margin call because I knew there was going to be a 2-day margin call, which I got the email on Sunday for a 2-day margin call. And they also gave me a phone call as well. So it's pretty serious for you to be able to do these margin calls. And it says here from this note, as you can see, the funds had to be transferred by today by 1:30 p.m. Central Time. So California time, that was about 11:30 a.m. And basically, if I did not do that, then they would be closing some of the products I'm trading for a forced liquidation, which we didn't really want because I wanted to be able to control which contracts I wanted to get rid of. And the important part here is that my account was able to close trades only today because of the 2-day future margin call. And thankfully, I'm happy to say that we did satisfy the margin call because if you look at the market today, the market did quite well. A lot of it because the yield bonds is finally coming down a little bit, which I already thought it was a panic move last Thursday and Friday. Also, the Johnson & Johnson one-shot COVID, I think that helps a lot with the confidence of a lot of the folks trading. And also, I really like the letter from Warren Buffett over the weekend where he said, "Never bet against America." So basically, I want to run through the micros first. So as you can see here, these were the 2 that I traded incorrectly. I really misread this wrong because I was doing bad in my E-mini. So I switched to trading additional contracts on the micro E-mini. As you can see here, I bought long when I shouldn't be because if you look at the MACD, that crossed below. That's a very bearish move. And then I added 2 more contracts here, which is silly because again, nothing tells me that it was going to reverse. So again, those are all bad plays. My average was 31,707. And as you can see here, I have a gray ellipse around it. And I do that when it's a losing trade, just so I can go back and study what I did wrong. And I definitely know what I did wrong. But what was great, essentially today, the Dow went up almost 600 points. I did exit at 31,415. It is at a loss, but with that move, I did recover $1,509. So I was quite happy with that. And then now let's switch to the E-mini. This is the one that I was gonna hold for a few days. Quite happy with how it reacted today, but I think I'm just going to hold it until tonight. I just want to see how the Asian market is going to react and also how the European market is going to react to this. But overall, I'm just going to take the loss on it as well. But I'm okay with that because I just want to have a clean slate, start all over, and we run through this risk of when it rolls over from a March contract to a June contract, which we don't want to be stuck in. But with this one, we have about $1,420 open, but that's okay because our trade on here, we entered at 31,818, and then if we zoom in again on this slight mistake that I made, I was a bit aggressive because it crossed over, so that was bullish. And yes, it was heading to the overbought section in the RSI, which is also bullish. But the problem is all of this happened below the zero line, and the probability of that being successful is a little lower, because you should never be bullish until you're above zero line. But again, that goes with your comfort zone, and as you trade more, you'll know when to take more risk and when not to take more risk. So for this one, we're about 200-ish points, well, closer to 250 points now to breaking even. But I don't think I'm gonna wait that long. We've recovered quite a decent amount. So for the E-mini, we had a mark to market. Again, that happens at 115. Mark to market at 31,509, and we gained $2,985. Anyway, again, if you check the link above from our episode, our content last week, week number 8, we were down $5,243.98. Thankfully, we did gain $1,509 on the micro futures, so that was 6 contracts. And we also gained from mark to market $2,985 from the one contract of the E-mini. So now, we're just down about $800, which I'm okay with. I'll just consider last week as a wash. So far we've recovered quite a bit this week. We've already hit our $2,000 goal, but hopefully on Friday when we come back, I'll be able to have and show you that, hey, the strategy works, and hopefully we'll be at a good ending cash balance on Friday. Anyway, just wanted to give you an update on how we're doing in the 2-day margin call. I'm quite happy we can continue doing this, and I'll definitely be a bit more careful this week and try not to be too aggressive while I'm trying to scale up. All right, hope you enjoyed that content. I'll see you on the next one.